Weighing down on Germany is exports and industrial activity, but is the strong labour market enough to keep their head above the water? Joining me to discuss is Dimitrios Alexakis from Europe Economics. Dimitrios, economic growth drivers in Germany have come to light in the second half of the year. But with this in mind, what will you be expecting from GDP data released tomorrow, and what can we expect from the euro reactions?
Well, I understand that the status is expected to release on the GDP forecast on November 13th. So I wouldn't expect an improve around 0.4%, 0.2% in the third quarter. We would expect the euro to react, but this is something, the extent of the reaction, it depends, because, for instance, we could see a positive reaction as a sign of a broader economic recovery in the Eurozone, but we could also observe a negative reaction as quantitative easing may be perceived by policymakers as not as important anymore, and there have also been recent complaints by German politicians on the ECB and for quantitative easing in Europe. But I think that we wouldn't expect a significant reaction from the euro markets unless there's some surprise inherent in the announcement.
Germany's inflation rate was confirmed today at a 4-month high. Germany's consumers remained upbeat in light of a strong labour market and falling prices for household energy and fuel. The influx in migrants will also help to stimulate domestic demand, but to what extent?
We know that Germany's population is shrinking, and the country has always been keen on increasing its population, among others, through migration. A recent IFO study, I think, that showed that migrants should give a slight boost to GDP growth this year, but this may be coming from two sources. On the one hand, it can be private consumption as the migrants spend more cash allocations. On the other hand, this GDP increase could source from higher spending for catering the migrants from the state. So it's important to realize that not all of the migrants that are currently on their way to Germany will stay there. So the extent to which the influx of migrants might help stimulate domestic demand depends on the successful integration of the migrants into the German society and economy, which requires considerable efforts, both from the government and from the German people. And this is something that is subject to certain constraints, and there's a lot remains to be done. So it's something we need to see how it evolves. But in principle, there should be a stimulus in domestic demand.
Societe Generale has stated German exports are likely to continue benefiting from relatively resilient demand from the rest of the euro area, the UK and the US. The bank suspects the poor performance of factory orders and industrial production may put some downside risks to balance of trade. So was this the case?
It has been resilient compared to slow growth elsewhere, so it's a matter of how bad things could have been. We know that Germany produces a lot of intermediate goods, which is such as machines for factories. So who they sell to matters, and particularly when considering the slowdown in China and the emerging markets. Nevertheless, recent data shows a stabilization in exports destination, some signs of stabilization in exports to these countries, even to China. So despite the loosening momentums in the Asian countries, there is room to mitigate this downside risk on the balance of trade, particularly through increases in renewable energy, as we saw that Nordex increased its sales forecast for 2015 as the shift towards renewable energy has increased the demand for such goods. So I think that this is downside risk is definitely something to be worried about, but there are remedies against it.
Germany's largest power producer, RWE AG, said 2015 profit will just meet its forecast after 9-month earnings fell 29%. Are we seeing a similar situation throughout businesses in Germany, or is the bigger picture one with more optimism?
We can definitely attribute falling earnings on German businesses to the recent slowdown in the emerging markets in China. But bear in mind that another trend that has been going on in Germany in the recent time is this shift towards renewable energy sources, and RWE is I think that is one of Europe's largest carbon emitters, and it's natural to be hurt by Germany's transformation from an economy powered by fossil fuels and nuclear to one based on renewable energy. In the opposite, the Nordex, which is Germany's biggest wind turbine maker, raised its 2015 sales forecast for the second time this year. So we can see that bad news for one market. Also, it's not a one-way road. There's good news and there's bad news inherent in the energy markets. And on this, there was a recent survey by the think tank Centix that showed that investor confidence in Germany strengthened in November. So this shift in energy is bound to cause changes in the incumbent industries, particularly the fossil fuel ones, as well as likely to spur innovation in the private sector when it comes to renewables. So I would say that if the falling earnings of RWE is expected given the current outlook. Is this a broader German issue? To a certain extent, due to macroeconomic factors, it could be, but there are also other factors in play that may actually that may stop this fall or even increase earnings.
Well, Dimitrios, thank you for your insights today, and thank you for watching. Tomorrow brings the last day of this trading week, so with Louise Macaulay bringing you the weekly wrap-up, be sure to check back. Goodbye for now.